Very good evening from London. The latter part of the US session has generally petered out. All the excitement was in the US morning. We had some negative data out of, firstly, the Chicago PMI reading, the lowest since September 2009 on the headline, the weak ADP employment number below expectations, allied with the increase in challenger layoffs from the last month, and also an increase against expectations from the initial jobless claims in the US morning session. All of that culminating then in some downside pressure in the US equity markets and the equity futures, continuing with the focus remaining on the Eurozone and the deterioration in Spain and Greece. So with some large downside pressure following the Wall Street opening bell, and we did see the US 10-year yield in the fixed income markets benefiting from some flight to quality, the 10-year yield moving to the lowest levels seen in around 60 years. We also saw the European fixed income markets boosted across the board, and some strength in the US dollar as the euro currency came under some selling pressure with fears regarding the Eurozone. Moving then through the latter part of the session, there was some light relief, lots of analysts noting the month-end rebalancing flows, also some attention being paid to some comments out of the IMF in regards to Spain. There was some suggestions out of source comments that there may be some considerations in terms of funding for Spain and contingency plans. However, that has latterly been denied in the US session at the back end out of Spain themselves, saying that there is no bailout on the cards for Spain. So this may just come back into the market focus in tomorrow's session. And in the terms of the general market as a whole, we have stabilised around the current levels. Nothing now really over on the wires in terms of market earnings after the close or elsewhere to move the market significantly before the key data we have. Firstly, overnight, we have the Chinese manufacturing PMIs and the European PMIs manufacturing throughout the session in the morning, all culminating then in the key non-farm payrolls report in the US morning at the normal time of 1:30. Just be aware there is a raft of data also out alongside the payrolls report. We have the average hourly earnings, the PCE numbers also, and also the Canadian GDP all at the same time. So it promises to be a good end to the trading week. Well, that's enough from me then. Hope you have a good trading session for the rest of the day, and we'll join you at the usual time, bright and early tomorrow morning, 6:30 London. Thank you.